Well, after wrapping up its two-day FOMC gathering, the Federal Reserve decided to leave rates unchanged, but reiterated enough confidence in the economy, its growth, and higher inflation to add some credence to the conventional wisdom there will be a rate hike next month. The Fed is playing ball with Wall Street for the most part, and maybe even telegraphing the next chairman will apparently be Jerome Powell, which we heard more about after the close. And the key here is that they're not going to aggressively remove accommodation. And of course, Wall Street is cool with a rate hike next month in light of all the positive economic data that has served to underpin the stock market rally. Moreover, investors were happy to hear that the Fed called the economy, quote, solid, although there's some misgivings about how sanguine Yellen and company have been about the stubborn lack of inflation. The fact is, the economy, though, has been crushing it from all angles, including corporate earnings, currently enjoying a string of year-over-year increases now 3 quarters in a row coming into this earnings period. Now, despite all the rosy and encouraging news, the market, you can tell it's on pins and needles of late. A lot of concerns about the GOP fumbling its tax policy ball, the shrinking breadth between market winners and leaders. So what's ahead for the economy? What's ahead for the stock market? And, of course, a Powell-led Federal Reserve. Joining me now to discuss, Danielle DiMartino Booth, a former advisor at the Dallas Federal Fed. Danielle, thanks for joining.
Thank you so much for having me.
All right, so you said on this show a while back it would be Jerome Powell, so take a bow. What does that mean for the stock market? What does that mean for interest rates and for this economy?
You know, I think Jay Powell is perceived by the market as being a known. But I would push back a little bit in that he was a Republican nominee, and I think that he will be a little bit more independent vis-a-vis Janet Yellen than what the market is seeing now. And I would welcome more independence, less politicians inside the Federal Reserve. I would applaud Jay Powell's announcement more than anybody else.
Jay Powell, or whoever may be chosen tomorrow, though, will be under a tremendous amount of pressure from a president who's not shy about expressing disappointment. So
absolutely, he went on Instagram and said as much.
Right. So Jay Powell may want to be independent. How independent can a Fed chief be from the president these days, anyway? Because it felt like Yellen and President Obama, at least ideologically, away from interest rates and those kind of things, were on the same sheet. And I think that might be a reason she may not be reappointed.
Well, and I would agree with you with that. But you have to bear in mind, it's since Paul Volcker was head of the Fed that we have not had a PhD in economics, an academic, somebody who runs by models and not what we see here on planet Earth running the Fed. So this is really the advent of a new era, if indeed it is Jay Powell who is named tomorrow morning. And you can go back to the most celebrated Fed leader of all time, William McChesney Martin, and he managed to be a very strong and uninfluenceable Fed chair through several administrations, and successfully so for the markets, for the economy.
You bring up Volcker, who made some seriously unpopular decisions.
He did, but for the good of all of us.
It created a lot of pain initially, though. We live in a microscopic society right now. Can the markets, can the president, can society accept any level of pain, even if it means we're going to get to something good?
We are an instant gratification market right now. People do not want to understand, as you were alluding to, that the breadth of the market has really shrunken markedly. I don't know that the markets are prepared necessarily to face the fact that this is the third longest economic expansion in U.S. history. Business cycles are cyclical. It's the very nature of the business cycle, and we're going to have to face that at some point. If there's a setback in the economy, so be it. We'll make our way through it.
All right, Danielle DiMartino Booth, thank you very, very much.
Thank you.